Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil markets.
Paris Rapeseed. Prices extended their break higher made 5 weeks ago, up and out of the early July to late October 2022 bearish Andrews pitchfork, which has its tines highlighted in purple on my daily chart. Initially, the market seemed unhappy about letting go of the broken upper tine, and I suspect that may have had a lot to do with the coincidence with the congestion band between 438 to 445 and 3/4, and the then flatlining short-medium moving average, currently at 446 even, such that for a while the market used the broken upper tine as an attractor. It was only when the upper tine finally dipped below the congestions that prices tried higher. However, even then the market ran into another, less powerful congestion area between 460.5 and 468 and 3/4, which contains the 2013 high at 464 1/4, the June 2021 low at 468 and 3/4, and at the time the shallowly declining medium moving average, currently at 452 even. However, after some hesitation, 2 weeks ago, the market broke up through this congestion and seemingly consolidated that surge higher, with a gapping action last week. Prices then had a fairly easy run up through the congestion at 491 and 3/4, 497 1/2, and 504 1/2. It was only last Thursday, when compiling this video, that we saw the market really hit some serious resistances made up from the congestion band from September 2012 between 513 and 3/4 and 519 1/2, but which was reinforced this time by the declining long moving average, currently 516 even. This capped the market, and prices have dropped off since then, filling in the gap down to just short of the congestion between 460 1/2 and 468 and 3/4. All this action has given me the opportunity to draw a new last day of May to late June bullish shift pitchfork, which is highlighted in green on my daily chart. This pitchfork seemingly has merit, as the market has moved down to test the lower tine, currently 470 1/4, from the upper tine, currently at 537 even, and also then through obviously the middle tine, currently at 503 1/2. I would keep a close eye on these tines, as I can already see what, with last week's high, they have influence. I'd like to finish up with a few things I raised 4 weeks ago, and ever since, and I quote, "So, what else does the recent actions show? Well, we could look at it all as a possible descending scallop pattern build-up. But, and it is a big but, it will depend on what the market does should it get down as far as the May low at 386 and 3/4, and there's a lot in the way in the meantime." Before I sign off, I don't want you to forget the other larger pattern here, one that is so large that has disappeared off my daily chart, but it's still sitting there. It is the February 2021 to July 2022 ascending broadening wedge pattern. To be honest, it's a large but imperfect pattern, yet it had been the main market drive higher in the early part of 2022. The break lower in July last year left the following incredible targets on the downside, which I highlighted back at the time. The primary target X is in the 352 area, which you can still see on my daily chart, and a harder to reach secondary target X1 down in the 217 area. These were at the time pretty much way out there targets that you could put into your diary on a back page somewhere like that, and just look at maybe once or twice a year. End of quote. Now, there is a lot to take in with those comments, so please feel free to play back this video. For the moment, I will set aside the big February 2021 to July 2022 ascending broadening wedge pattern, and instead concentrate on the idea that this market may have formed or be forming a late October 2022 to date descending scallop pattern. Okay, so in this pattern, what we are looking for is where the market will halt in its ascent so that we can then have an idea of the subsequent size of the move. Then we also need to ascertain whether the move is a further move higher or a pullback lower, so that we can apply the size of the proposed descending scallop pattern move to the already constructed actual move. At the moment, it is still a little too early to see if the bearish action since the run-up last week is it. But I will say this, halting at where the long moving average crosses a significant congestion area is a reasonable place to pay close attention to. Now, I will add this final comment. Data indicates that markets break lower something like 8 out of 10 times for descending scallop patterns. And I just want you to remember that. Winnipeg canola. The drop over May, down through the 2021 low at 629.5 back 8 weeks ago, saw a subsequent recovery back up through the June 2021 low at 655.90. Over the combination of the then declining short medium moving average, currently 722.30, and the old July 2008 high at 710.80, which was the gateway to congestion seen throughout March, April and May, and stretching up to the July 2021 low at 761.90. It had within it the then declining and now flatlining medium moving average, currently 730.40. It's within this congestion, just under the declining medium moving average at the time, that the rally subsided, spending a couple of weeks in between the short medium moving average below and the medium moving average above. Now, this whole action over the middle of May to the middle of June period created a V bottom. Weeks ago, I raised a question as to whether the V bottom would have an extension or a handle. Well, the answer was yes. We had an extension stroke handle, a pretty clear one, and one that turned out to also be a bull flag. This prompted the move up 3 weeks ago that ended last week, and in the process, prices punched up through the July 2021 low, the March 2008 high at 770 even, which was the previous all-time high. The significant flatlining long moving average, currently at 788.40. The August 2021 low at 817 even. The interesting 50% Fibonacci of the May 2019 to April 2022 move at 820.60. And the September 2021 low at 839.20. This last one was significant, as it was breached but not broken, and prices have since stayed in between the September and August 2021 lows. All this action has allowed me this week to draw a bullish late May to late June, bullish, as I said, acutely bullish Andrews pitchfork, which seemingly has still merit. The market is currently in between the lower time below, currently 813.90, and the middle time above, currently 865.10. Yes, that's how big a acute line it is. Now, I still would pay a special attention to these times going forward, despite their quite acute angle. They seem to be important right now, and until they are truly broken, not just breached, but broken, they will remain so. First, Malaysia crude palm oil. The mid-August to early November 2022 mildly bearish shift pitchfork, the one highlighted in green on my daily chart, is still running the show here after so many months. This mildly bearish pitchfork has guided prices more or less lower. Initially in between the upper time, currently at 41.56, and the middle time, currently at 35.23. Then for a while in May and June between the middle time and the lower time, currently at 28.91. For moving back up again in between the middle and upper times. The more recent developments have seen prices push up and stabilize over the slowly declining medium moving average, currently 3,800, and especially over the ever so slowly rising long moving average, currently 38.83. This stabilization had been very interesting, as the market seemingly not only formed a recent hesitation area over July, but that hesitation area is in fact a double bottom for target X for this pattern in the 41.20 area, just under the green upper time. This past Monday, the market made a huge combined key reversal up and bullish engulfing pattern that even penetrated the upper time, and that finally also reached target X. But then we've seen prices move back down to just above the congestion in the 39.86 zone. So recent actions since late May has given me the opportunity to draw a late May to late June bullish shift pitchfork that you can see highlighted in dark blue on my daily chart. The market has tested all three tines. The upper currently at 43.02, the middle currently 41.07, and the lower tine currently 39.12. We are currently in between the middle tine overhead and the lower tine below. Please keep a careful eye on these tines as they seem, despite their relatively acute angles, to be driving the market in their direction. Please also note that in the middle of August, the tines of the more recent bullish shift pitchfork exit out of the top of the longer term mildly bearish shift pitchfork.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.